everyone. Welcome to another episode of In Conversation by Advisor Coach. Today in conversation, our guest is Mr. Vishal Biraia, Fund Manager Equity with Bandhan Mutual Fund. Vishal also manages Bandhan Infrastructure Fund and Bandhan Retirement Fund. Welcome, Vishal, to In Conversation with Advisor Coach today.
Thank you very much. Glad to be here. Thank you.
Our pleasure. Our pleasure. So, Vishal, Bandhan Mutual Fund is launching their NFO of Bandhan's Business Cycle Fund on the 10th of September and closing on the 24th of September. So for our viewers, if you could just discuss in terms of what's the concept, what's the fundamental, why a business cycle fund at this point of time, will it be more like a diversified or a sector or specific fund? If you could just provide a lot of insights around this business cycle fund to our viewers.
Sure. Thank you for having me. I'm glad to be on this platform.
My pleasure.
I have personally used it. It's a great platform to be on. So it's great work that you guys have done for the industry.
Thank you very much.
So see, for a business cycle fund at this stage of the market, right, we are seeing a lot of sector funds do very well. And if an investor is, say, he invests in one particular sector and now is thinking of going to another sector, he will have to pay either 12.5% or 20% tax, and then he will move to the other sector. So what we are committing to, what we are offering in this particular fund is that we are saying we will take significant sectoral bets, okay, in the fund, and these are medium-term calls with these sectors doing very well, and some of these sectors will do very well. And as and when we decide that it is time to move on, right, to another sector, then we do that internally in the fund without any tax implications.
Sure.
And if you see in the markets, generally there is a 2 to 3 year cycle, very few sectors for a 4-year cycle. And after which the sector rotates, the leadership of the market changes. And we've seen this time and again, historically, for n number of years. You can go back in n number of markets and you will see this happening. So if I can pick, okay, the right sectors to be in and the right sectors and the wrong sectors to avoid, right? In that scenario, I should be able to meaningfully beat the diversified fund returns and to outperform the market returns in general. So that is the reason I think a business cycle fund should definitely be looked at and should be a core part of the investor's portfolio.
Sure. So the strategy of this fund will be more like a multi-cap sort of a strategy?
So here we will have, we are not keeping any limits on sector weights or any limits on large cap, mid cap, small cap, any weights. So we are saying that is all fluid and will depend on where am I, which sectors am I overweight and which sectors am I underweight. So this will be more like a fund having significant deviation from the sector weight. So give you an example, say the weight of industrials in the NSE 500 index is about 12%. And in my model portfolio, if I'm to deploy it today, then my weight would be somewhere around 18 to 20%.
Sure.
Right? So if you look at 18 to 20% is a meaningful deviation, and that is where you capitalize on the sector doing very well. So for an example, they say materials is 9% of the index. Materials would comprise of metals, cement, and chemicals, right? And if I am to deploy my model portfolio today, then my weight would be, say, about 3%. So this is a meaningful deviation. So both on the upside as well as on the downside, these are just two examples. So we will have a meaningful deviation on, so that we are able to capture the essence of that sector, right? To that extent, we will go overweight. But we are not saying that we, at any point in time, we will have only a few sectors in the fund. We may have other sectors as well. So,
sure. So pretty much a market cap and a sector agnostic fund. Sure. Could you also tell our viewers in terms of the the strategic way the portfolio will be built up for this business cycle fund NFO?
Yes, we will have a top-down approach for selecting the right sector. We will look at where in the economy are we currently placed, where in the economic cycle are we currently placed, where are the market cycles taking us, what is happening in each particular sector. So once we determine this, then we determine as to which is the sector where we want to be meaningfully overweight and meaningfully underweight. Once we get that, then we will get to the stock selection, portfolio creation framework. Now, in the portfolio creation framework, the first filter that we use is management quality, right? So companies that are that we are fine with in terms of the management quality. We look at corporate governance, capital allocation, interest of minority shareholders, dividend policies, and the likes. Then we get to the company fundamentals. What is the kind of growth? What is the kind of market share gains? What are the kind of profitability? What are the return ratios? How sustainable are these? How resilient are the fundamentals of the company? And then lastly, we'll get to the valuations, because valuations by itself will not make we will not be able to make a valuation decision or investment decision only on the basis of valuation, right? It has to be a combination of management quality, company
Absolutely.
fundamentals, sectors, and
Both the
then
quantitative and the qualitative aspects.
right. So valuation will be the last parameter that we will check. If the management quality and company fundamentals are very robust, then a slight premium on the valuation side will be okay.
Sure. So typically the portfolio would have what, about 40 to 55 stocks once the portfolio gets created ultimately?
Yeah, we think, say, it should range, most of the time it should range between 45 to 60.
45.
Say, yeah. So for an example, if I'm very overweight on banks and technology, the number of companies will reduce, the weights of large cap will be much more. Say for an example, if I'm overweight on industrials, discretionary, and NBFCs, so in that scenario, number of stocks may increase, and the weights of small cap will also be significant.
Sure, sure. Why should investors and distributors consider, investing in Bandhan Business Cycle Fund? And in your opinion, do you think it forms a part of the core portfolio of an investor?
So I would definitely think it forms a core part of the portfolio, because this is a fund where you get to play the sector cycles in a tax efficient way, and there is incremental return potential, right? That if I'm able to pick the right sectors, and if I'm able to meaningfully be underweight on the wrong sectors, then I should be able to meaningfully outperform. So, and being a diversified fund to some extent, right, it will also reduce the risk. So, investor gets an opportunity to play the sector cycles, right, and without taking with the benefit of on taxation, and without taking the risk of moving through one sector to the other by himself, right? So now the caveat here is, I will not be right all the time, right? There would be times where I am overweight a sector that I should be underweight on. So that is a mistake that I am going to commit, I can tell you, right? But what we are saying is that these mistakes would be far lesser than the right calls that we will make, right?
Sure.
Even if I am right most of the time, not all the time, even then I should be able to meaningfully beat the returns of the diversified funds or of the market. So that is what we will plan to do.
Sure, sure. And do you think, in your opinion, this should be part of a core portfolio for an investor?
Yes, I would definitely think so, because this gives you an opportunity to play the sector cycles. And if you see the returns of some of the sectors have been phenomenal. So I also run the Business Infrastructure Fund, right? The index is up 55% year on year. So as of now, right, we have meaningfully been able to outperform that sector, the index. But I'm saying that if these are the kind of returns that some of these sectors can give, sometimes, right, these returns will not be sustainable. But if I'm able to capture a big portion of these returns in the fund and move to the next sector, so this is an example, right, then I should be able to meaningfully outperform.
Sure. So Vishal, our markets are going through a lot of activities as we speak. So what's your view on the markets, considering the current geopolitical as well as the interest rate environment?
Yeah. So the most important question, huh? So what is the market outlook? So actually, today evening we are due for a very important data point from the US, the non-farm payrolls for August.
Yes.
So the last time when we got this data on 2nd of August for the month of July, we had a very big negative surprise. But that was more of a discrepancy in data rather than a trend.
Right.
So why this data is important is that whenever in the last 12 cycles of interest rate cuts by the US Fed, whenever it has been followed, the interest rate cut cycle has been followed by a mild recession, stocks have done well. And whenever it has been followed by a severe recession, stocks have done bad. So as of now, the expectation is, the probability is that US may go through a mild recession, because fiscal policy is also getting contractionary and monetary policy as well. Right? We will have some cuts in interest rate, but the overall there might be contraction. So if this is the scenario, And if we get into a mild recession only, then it will be good for global stocks, for US stocks, as well as for India, because companies may outsource a bit more. In that scenario, I think the external environment might be okay for India. And crude, because of the energy transition gaining popularity and making economic sense in India, abroad, most of the places, right? Crude is also not expected to go up substantially. And even if there is a spike because of geopolitical concerns, it may not stay there, right? Because energy transition then will become even faster.
That's right.
Saudi Arabia today is able to balance its budget at just $80 of crude. So I don't think they are also expecting high crude price. So the external environment.
We have seen the London Brent and WTI both coming down.
Yeah.
Yeah.
So if we see today, the external environment for India seems okay. The current account deficit is closer to 1%. Balance payment is positive. Currency is stable. Interest rates, after US cuts, we should also see some relief on the interest rate side. So I think we are okay. However, valuations are a concern in certain pockets. If you see Nifty, if you think in terms of earnings, if Nifty does 1250 rupees of EPS for the next financial year, and if we give it a 20 times multiple, then we come to 25K.
Sure.
So we are there. So, and if you give a multiple of 18K, 18x, right? Sorry. If you want to be conservative, which is the 10-year or 12-year average, then we'll get to about 22,500. So you can say Nifty is, say, maybe fairly valued or maybe 5-8% overvalued somewhere there. So we might be there. But if you look at the other end of the spectrum, which is SME, right, we are seeing enough euphoria there. And there are enough samples for me to point out. So in between these two extremes, these two sectors, ends of the spectrum, I think there are pockets of overvaluation, right? That as a fund manager, I have to navigate at any point in time. Right?
That's true. Yeah.
So we are not saying that it's prohibitive. The valuations become prohibitive. We don't see that scenario yet. There are certain pockets of overvaluation that as a fund manager, I have to navigate anything.
That's right. True. And I completely agree with your thought process. So today, Vishal, through this in conversation, what message would you like to give to mutual fund distributors, the advisors, as well as the investors, more particularly about your business cycle fund NFO?
Yeah. So thank you for that question. There is what I'm going to say is that, see, markets will have some volatility at this point in time, should be taken as an opportunity to get in. And please invest from a medium-term perspective. Please advise for a medium-term view on whatever funds that you recommend. And in a business cycle fund, you are the investor, your client is going to get an opportunity to play all the sector cycles, right, across the time frame, and should be able to meaningfully outperform the returns of the broader market. Now, there is a risk that I may choose a wrong sector at some point in time. Sometimes this is going to happen, but that is a risk that is applicable to every fund. So it's not really applicable to a business cycle fund. So be assured that we are putting in efforts to outperform and to deliver meaningful returns to your investor, and we will continue to do so.
Absolutely. Because I don't think any portfolio is ever insulated from the market shocks.
Indeed.
So, well, for the viewers, this is Mr. Vishal Biraia, Fund Manager Equity with Bandhan Mutual Fund, telling us about the new fund offer for Bandhan Mutual Fund, Bandhan Business Cycle Fund, launching on the 10th of September and closing on the 24th September. Thank you very much, Vishal, for taking out time to join us for a quick conversation and taking us through the reason as to why a business cycle fund, and of course the market views as well. Thank you very much, Vishal.
Thank you very much, sir. Thank you for the opportunity. Glad to be here. Thank you.
Thank you very much.